China is vying for dominance in the global electric vehicle market. The Chinese government has pledged at least $60 billion to help the electric vehicle industry, and it's set a goal of transitioning to all-electric or hybrid vehicles by 2035. They are taking a holistic approach to win and dominate the global electric vehicle market. In 2020, electric vehicle sales in the United States were significantly behind Europe and China. Only 328,000 electric cars were sold in the United States, 1.33 million in China, and 1.39 million in Europe, out of 3.24 million. Despite the pandemic, international EV deliveries increased by 43% year over year in 2020. The United States only had a 4% growth. However, there is evidence that the United States is taking electric vehicles more seriously. President Joe Biden reaffirmed the United States' commitment to combat climate change and achieve net zero emissions by 2050. He also announced green infrastructure initiatives, including the addition of 500,000 charging stations. One of the top automakers in the United States, General Motors, announced intentions to provide electric vehicles by 2035, surprising many entirely. They do, however, still have a lot of territories to cover. According to GM's global sales figures from last year, the business sold approximately 6.6 million automobiles globally. How many of those were powered by electricity? Only 49,149. Can the United States catch up to China's enormous lead? How might the United States go about accomplishing this? That's what we will be talking about in today's video. Make sure to keep yourself informed and engaged by subscribing to the channel, clicking the notification bell, and turning on all notifications so you won't miss out on our latest uploads. Let's look at how China got to be in charge of the market. Over a decade ago, the country determined that it wanted to be the world leader in electric vehicles. China's electric vehicle industry illustrates how government policy might potentially stimulate industry innovation. For various reasons, China is placing a large bet on electric automobiles. To begin with, they've already been fans of classic cars. They sought to find a method to catch up technologically. They also have a serious air pollution problem and are the world's top oil importer. China is currently the world's largest emitter of greenhouse gases, intending to be carbon neutral by 2060. The Chinese government has been a major supporter of electric vehicle adaptation. The country has poured tens of billions of dollars into promoting electric vehicle sales. It's no secret that without legislation, restrictions, or subsidies, electric cars in China would have never gotten off the ground. The government has been pushing the electric vehicle future in California, China, and Europe. Subsidies and incentives are available in China that benefit automakers, suppliers, and consumers. In other locations such as Beijing, entrance to the city center by car is only possible if you drive an electric vehicle. To obtain the right to buy a car, you must first pay $12,000 for the license plate. However, if you buy an electric vehicle, that licensing price is waived, so you get it for free and save $12,000. Manufacturers in China are likewise subjected to quotas. They will be penalized if they do not create a set percentage of electric vehicles each year. However, some doubt whether this is a long-term strategy. Sales dropped in 2019 as the government reduced several incentives. The total share of electric vehicles fell from 8% in mid-2019 to 5% by the end of the year. Apart from Tesla, the only means to market electric vehicles has been government subsidies, whether state or federal. We saw a lot of that in China. Outside of incentives or early adopters, we haven't observed organic demand. The sums of money that have been poured into the sector are staggering. It's 33% of total sales, not profits. The EV market is a market that the government formed. Subsidies, on the other hand, cannot last indefinitely. Some believe that with the arrival of other luxury companies like Tesla, people will eventually be weaned off of them. To the public, China is winning the electric vehicle race because of the numerous subsidies, but closer examination reveals that something happened in 2020 that changed the situation. Like NIO and XPeng, other EV firms began to create very attractive, good-looking, reliable long-range vehicles once Tesla entered the market. Customers in China have stated that they do not require subsidies to purchase an electric car for the first time. In the United States, a 7,500 tax credit is provided, but not all automobiles qualify, and the incentive expires if the automaker sells more than 200,000 vehicles. In 2018, Tesla crossed that line. Democrats have submitted a new plan to expand their credit to 400,000 cars for a 7,000 tax credit for automakers who have reached that quota. Tesla, for example, does not break down deliveries by area, but during the pandemic last year, it shipped around 500,000 cars. In the United States, the Biden administration appears to be much more open to extending, if not offering, further incentives for the electric vehicle market and infrastructure development, which is one of the primary issues. For years, China has been a strong supporter of electric vehicle infrastructure and firms, as evidenced by their EV sales and, to a lesser extent, Europe's. Without China demanding that electric vehicles be a part of its future, and the most important car market globally, which has a worldwide impact, none of this progress towards electric vehicles would have gotten off the ground. The cost of electric vehicles is the key deterrent for buyers, and batteries account for most of the cost of electric vehicles, including subsidies. The Chinese government also assists with battery manufacture and supply chain. After all, China is the world's largest electric batteries and motors manufacturer. Northeast Asia is the world's largest producer of batteries. Japan, Korea, and China are the top producing countries. They account for nearly all of the overall battery output for automobiles. As a result, China is the industry leader in battery manufacturing capabilities, and analysts agree that China has complete control over chemicals and manufacturing facilities for electric vehicle battery manufacture for the next 5 to 10 years. Some organizations in the United States are likewise concerned about the future of electric mobility throughout the world. Battery production is essentially non-existent in the United States, with the exception of Tesla. GM and other automakers have started their intentions to enter the market. GM is now investing $2.3 billion in LG Chem. They're constructing a facility in Ohio that will be completed in 2020. Meanwhile, ties between the United States and China are at an all-time low. The United States may become overly reliant on Chinese batteries, and when this happens, China can easily decline supply to the United States. China has also made charging a national priority, establishing an extensive network across the country. It already has over 500,000 charging points, compared to about 100,000 in the United States. Tesla has an extensive network with thousands of locations throughout China as well. China's charging infrastructure has already been harmonized, so whichever automobile you choose, you'll be able to charge it up at a gas station. As a result, America's first action should be to strive to develop a uniform charging standard, so that no matter what electric car you buy, you'll be able to charge it wherever you need to. After opening a factory in Shanghai at the end of 2019, Tesla has seen tremendous expansion in China. In 2020, the country brought in $6.6 billion in revenue for the corporation. Last year, the Model 3 was also the best-selling NEV. Tesla's Model Y, which is built in China, began deliveries in January and was the third best-selling electric car in February. Tesla has done an excellent job in China. Elon Musk recognized China's desire to be a global leader in electric vehicles, and he recognized that incentives might be available for Tesla to take advantage of. Though other foreign automakers make cars in China, they must set up joint ventures with a Chinese automaker. SAIC owns 50% of GM in China. Ford also has 2 joint ventures there, but Tesla was able to get a unique deal in the country. They're the first automaker to come into China, and the government let them own their factory and let them operate without a joint venture, without a local Chinese affiliate. So, Tesla's growth in China thus far has been helped by the Chinese government. It's been a red carpet welcome for Tesla because the Chinese government sees the value of having Tesla and its suppliers right there planted inside China, further fortifying China's stance as the strongest EV industry in the world. But Tesla has lowered its price in China a couple of times to qualify for subsidies. and then some because of cheaper Chinese-made batteries. One of the reasons Tesla did exceptionally well in China this year is because it has made price cuts a couple of times, and the most significant cut was 8% in the beginning of October. With this from 12 to 13,000 orders a month in September, all of a sudden, it jumped to 31,000 orders in October. Tesla also dominates the US EV market. The company made up 79% of all electric cars registered in 2020. The only non-Tesla of the top 5 cars sold was the Chevy Bolt, with around 19,000 vehicles registered, compared to the Model 3, which alone was over 90,000. The company's market cap grew over $500 billion in 2020, making it worth more than the 9 largest automakers combined, even though it sells only a fraction of the number of cars. China sold roughly 1 million more EVs in 2020 than the United States, with less aggressive subsidies and a lack of battery manufacturing. The United States has its work cut out for it if it wants to catch up. The United States and China are different markets. The US will not mandate certain things as much as China will. China has mandates to cut down on pollution. They had huge incentives. Their owners and many of the companies are pushing the EVs. In the United States, we have to have more organic growth. Plus, the consumers in China and the United States are quite different. While the Chinese will buy miniature cheap EVs, Americans are more drawn to SUVs and gas-guzzling trucks. Ford's F-Series, which includes the F-150, remained America's best-selling vehicle for the 39th straight year in 2020. The F-Series brought in $42 billion in revenue in 2019, which is more than the NFL, NHL, NBA, and Major League Baseball combined. The EV trucks pose a threat to the truck makers' market share. A slew of electric trucks are coming to the United States in the next few years, and several startups are entering the space. American auto giants are making significant changes too. This is General Motors and Mary Barra making a very clear and declarative statement right now. They will be fully electric, and they plan to be there at least by 2035. GM CEO Mary Barra said that we are committed to fighting for EV market share until we are number 1 in North America. China is GM's largest market worldwide regarding total vehicle sales. In the summer of 2020, it launched the Hongguang Mini joint venture Wuling. The small EV costs $4,400 and has seen rapid growth in sales. They're selling more than 30,000 of these in a month. If you can't get to that volume in a month, you're doing exceptionally well. So GM went from quiet and not doing much in China with electrics to this surprise sensational new product. EVs are still a tiny percentage of the global auto market, so it's still anyone's game. Automakers want to keep their customers happy, but don't want to lose market share to startups or Tesla. In China, competition is snowballing. Warren Buffett-backed BYD's new luxury sedan jumped into the top 10 electric cars sold in China last year. China also has hundreds of EV startups. These include shorter range and lower priced cars, but there are also notable luxury brands popping up to compete with Tesla. They include NIO, XPeng, and Li Auto. All 3 companies have seen high valuations in the past year. It's the wide open capital market, and that's the rich valuation that makes the entrepreneurs believe that it's a worthwhile effort to try, even though the outcome can be binary. However, they still think it's an attractive venture. The race between Detroit automakers and a slew of startups is starting to unfold in the US. GM has unveiled the all-electric Cadillac and Hummer EV. Ford will debut the fully electric Mustang Mach-E. Then there are startups like Rivian, Canoo, and Bollinger Motors, all working on electric pickups. In Europe, Volkswagen is another automaker accelerating plans to dominate the EV space. In the 4th quarter of last year, it sold more than Tesla, but that number includes plug-in hybrids. The German automaker expects half of US sales to be electric vehicles by 2030. While China has a commanding lead, all hope is not lost for the US to catch up. China is ramping up battery production and car production for electric vehicles, but the quality of their batteries, and particularly the quality of their cars, is still not world-class. And that applies to Chinese cars in general. They're not piles of junk, but they're not going to compete with leading European brands or Tesla. Though if they're going to set their sights on Europe and the United States, they're going to have to raise the quality of those cars overall to be competitive. The US has been the standard for the world and so many technologies here in America for 100 years that we can't conceive of a future where we're not in charge. We are not the leader. We're not the standard setter. But the risks are real. The US can come back. If the United States wants to re-establish its dominance in the EV market, the country has to act fast and act now. What do you think? Can the United States ever bounce back from this setback? Will China take over the global electronic vehicle market? Leave your thoughts in the comments below. Thank you so much for watching. If you liked the video, please remember to like, share, and subscribe, hit the notification bell, and turn on all notifications so you can stay up to date with our latest uploads. See you guys in the next one, and remember, keep living life bullish.